Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and simply profit for life like we're doing today. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date, March 11th, 2014. Money is flowing into our pockets today, not only because of our short positions, which I will go over shortly, but more so because of this trade that I gave you guys yesterday in this very video. I also gave it to members of my research center and intraday stock chat. Take a look at this on Plug, PLUG. All right, yesterday we talked about the bearish pattern here. It broke down there. I made some money yesterday on it. This morning it gapped up. I picked up more puts on it and have just pocketed a huge amount of money. I had a net short position as well as the puts. And again, look at this collapse. All right, the writing was on the wall here, folks. And again, a drop of literally from the highs of the day from $11.50 to a low of $8.30, which happens to be right around gap fill. All right, that is a humongous, almost basically $3 drop. $3 drop on an $11.50 stock when it was at its highs. And again, even if you had picked it up yesterday when we were talking about it in the video, you just made a boatload of money. And again, unbelievable action. So members here, literally I took 45% on my puts, and I could have taken 70%, but I'll take the 45%. I made $1 and $1.50 on my short first half, second half on the PLUG. And again, that's the way it's done, folks. So awesome trade there, and just understanding it is key. You have to look at a chart like this and just understand that anytime you have a chart, especially on a chart that was 50 cents just 6 months ago, if it's at $11, $12 a share, and you're still seeing a company that is losing money, hemorrhaging money, needs to raise money, all right, and it's gone vertical in the last few days like this. I mean, basically the last week, the stock was $4 and then it got to $11, almost a 300% move. But anything like that type of move, you're going to get a pullback. Now, you don't go heavy on the shorts. I only had a few thousand shares short, and I bought, yesterday I had 30 contracts, 30 put contracts, and then today 20 put contracts. So, I mean, I wasn't putting a ton of money behind it, but I was still able to make multiple thousands of dollars in profits just by risking a little. And that's really the name of the game. You got to understand what you're dealing with, and you got to be able to pinpoint these tops. I mean, that's something that I've made a living, millions of dollars doing, pinpointing when a stock is sputtering at the end of its run. And again, today, look at that reversal today. And where did it go? Right to that gap fill, which I told you guys about yesterday. So awesome move there. Let's go back to the spiders chart here. I want to go back to the intraday and talk a little bit about what's going on. On the intraday 10-minute chart, you can see that we are bouncing off the lows, but we're still down off the highs. And this is very interesting. We saw a nice move up. Markets, after an initial early sell-off on the 10-minute chart, we made a nice move to the upside, and then we topped out and just reversed to the downside. And this market is following the dollar yen perfectly. I mean, it really is. It continues to follow the dollar yen almost identically. But the cracks in the glass, the cracks in the ice are there. I mean, any way you want to talk about it, you want to cover it, the end is near. All right, now is it next week, next month? That's the bigger question. But it's near in the scheme of the markets. And again, you can sense it. Because even when the markets are moving up throughout the course of the day, what are they ending? I mean, yesterday I think the spider ended flat on the day. If you look at last week, what was the market up on Friday? Like 3 cents on the spiders. I mean, you're inching up on the up days, and you're barely breaking the flat line to close there, if at all. Now, you're not seeing major selling yet because it's still distribution. You still have the mom and pops, kind of the butt of the joke people, which are the ones that are going to be end up holding the bag, unfortunately. They're the ones that are still kind of holding and buying right now and hoping that the market still has another 20-30% gain in it. But bottom line is there's too much geopolitical issues out there. I mean, what did I tell you guys about China yesterday? China just reported that 18% drop in exports year over year. 18%, and they lie about their numbers anyway, so it was probably like 30%. All right, that is scary. All right, they also reported an 18% drop in crude imports month over month. Just from last month, 18% import less of crude oil. I mean, these numbers are astounding. All right, then you look at things like the Russian-Ukrainian Crimea situation. All right, that's not getting better. All right, you look at the VIX. I mean, the VIX has been a great signal. Look at the VXX, guys. The VXX is down a little bit today, but if you go to the daily chart, the markets have been making new highs, and the VXX hasn't even gone back to the January lows yet. All right, and that's definitely a signal that something is at work. The other thing that I think has to be noted here, look at the copper chart. Look at this collapse in the copper chart, an epic collapse. And sure enough, you might say, well, what's going on there? Well, basically, China, if China's slowing, they're the major consumer of metals, right? They're the huge they're building out things. If things are going to stall and collapse in China, copper is going to collapse. And this is just confirming that viewpoint. All right, and there's a lot of other factors out there that we can talk about as well. It's interesting to see oil continuing to roll over the last few days, which would be expected if the global picture stalls. But I think, again, the China numbers are scary. What's going on in Russia, Ukraine should be continued to be monitored. Because basically, I think there's a vote on Friday in Russia whether or not they'll allow Crimea in as part of their country, and that's expected to pass. And then I think on Monday, Crimea is going to vote whether they want to join, and they're expected to vote to join. So basically, you're having annexing of countries now, of parts of countries. I mean, just think about this new precedent being set, where a country can just go in and say, oh, these people kind of like us, and they want to join us, so we're going to take that over. We're going to let them join. I mean, it's whatever happened to the sovereignty of a nation. What is this, back in the 1700s? When England and Spain and even before that 1500s, when they were going out and just annexing across, oh, we'll take over this and that. It's not those days anymore. And so, I mean, what's scary about this, I mean, China doesn't like it because China is on a border with Russia. The U.S. doesn't like it because it's upsetting the balance there. Europe doesn't like it. I mean, it's just causing some major issues there that must be noted. And again, for the market to not really be factoring in any of these worries, and we haven't even talked about the biggest one yet. What about the Federal Reserve? Federal Reserve is meeting next week, next Tuesday and Wednesday, and guess what they're going to do? They're going to taper another $10 billion. Why? Because the jobs number was actually pretty solid, even despite the weather, and they're going to be saying, and we all know this at this point, and the market really hasn't factored it in yet, but they'll talk about it later this week and probably spook the markets a little bit, just a minor amount. I don't know how much selling we'll see since we haven't seen a lot of selling yet. But think about it like this, right? So the jobs number was good. Weather, not a factor. The Fed still thinks the weather's keeping the economy down, so they're not going to stop tapering. And all of a sudden, you're going to get another $10 billion off the table. That's going to be a total of $30 billion removed in printing that the Fed, has been doing. And eventually that's going to take heart in the economy. And globally it's going to hurt. I mean, there's a lot of avenues there. So I don't want to digress get too involved here. The bottom line is JP Morgan's down 70 cents. Beautiful double top a couple days ago on Friday. Goldman Sachs is under pressure. We're seeing financials quite a bit under pressure here, by the way, today. Chevron's down $1 and change. Nice fall. I mean, you're basically looking at a lot of stocks. Now, stocks that I have short, let's take a look. DuPont, down over $1 today, guys. We're in the money by about $1.25 on this play or so, dollar and change. And really nice move on that. That'll have some support at the 20 right here, but I think it's going to dump out to the 50. Continue down. Priceline, take a look at Priceline, down over $14. Beautiful collapse on Priceline these last few days. Yahoo, down another 26 cents, breaking below the moving averages. I'm short here. I mean, basically, bottom line is the markets haven't even started to fall, but the charts that the PPT, which is our proprietary analysis, have shown that are going to be the weak ones, they're already starting to show the cracks. They're already starting to fall. And could this market buck the trend and move up a little bit here and there? Sure, it could. I mean, that's what it's been doing for the last 6 months, a year, or whatever. So it could. The upside's limited to 1% or 2%, though. That's it. I mean, that's what you'll get, 0.5% up, 0.25% here, 0.5% there. That's about it. And then when all is said and done, you'll see at some point reality check in this market, and that's where you'll see the dump in the market. And you'll see probably around that 7 to 10% collapse. Again, that's what my expectation is. What I think actually is, if we go back to the Spiders daily chart, you got a 7% drop approximately last time in late January, early February. You should see this time from this high about a 10% move, which actually will take you right to here. So, and then you would get another buy the dip. You'd have buyers come in. Now, I don't think the next time down you'll get a move back up to new highs. I think it'll be shy of new highs, and I actually think what it's going to create here is a shoulder head, and then the bounce will give you another shoulder, and you'll create a head and shoulders pattern for the next move. But that's speculation. That's hardcore speculation. But look at Plug, guys. Man, Plug keeps on inching down. I mean, this thing is coming down here. I wouldn't even be surprised if this goes through that level to this level. This is your next support right here at the $7 level. $7 is your next support. But just amazing how the price action works, and nailed that trade for big money. Not only was I short a few thousand shares, but I also had, again, puts that I picked up and got great entry prices on those and just kind of milked them. 45% gain on my puts today alone. That's intraday, guys, 45%. Bottom line is, come join us here at InTheMoneyStocks.com, guys. Again, this is how you navigate through this market. How you truly know what's going on. And you want to be here ultimately to make money, and that's what we do. So come join us in a 7-day free trial to the Research Center. If you're a swing trader or an investor, that's where you want to be. Take care.